Hi again. Today I will analyze the USD pairs, and also I will give another example for engineered liquidity on AUD Japanese. Um, we are looking at 1 hour chart. As you can see here, engineered liquidity is something that is not natural liquidity. If you can look here, this is engineered liquidity. And as you can see, you see the breakout. So buyers start to buy here, and then there's another test. So buyers may add to their position, and then what happens is that they get liquidated, and then it goes up. Another example for the engineered liquidity, I think it was on Euro New Zealand dollar. Here, this one here. Normally, according to technical analysis books, when you see something like this, it is a bearish pennant normally. So people start to sell here and target this area. But what happens is it goes to the opposite direction to make sure that no one is profitable on this short in shorting this pair, because sellers are here. If we say that sellers are here, normally you may see this pattern, and then price goes here to first to liquidate these sellers here, and then mitigate this order block, and then goes down. But what happened here, it went up to liquidate here to make sure that no one is profitable, and then it went down, and again to make sure that to liquidate sellers who are here, and then it went down. I think it will go more down, maybe to this area here. This is our true demand. As you can see, you can also draw a trend line. Trend lines work because people think that because I'm saying the trend line is mostly liquidity, but they work if they are on the extremes normally. Because here, for example, here is also a trend line, and also it got liquidated. Here is another trend line, got liquidated and then went up. So this is also engineered liquidity. And at the same pattern here, people think that it will goes up. Actually, it goes up, but here, and then people start to buy here because they think that this already has broken out, and then after that, they go down to make sure that no one is profitable, because some people, even people who are buying here, they move their stop loss when they have some profit. They may take some and then move their stop loss to break even, so they got liquidated, and then the real move start after all everyone is liquidated, because they actually want to make sure that no one is profitable. You have to make to look for that, because as you can see here, buyers here got liquidated, sellers who are here on the extremes also got liquidated. We may see some maybe retracement to this area here, because I think this time it won't get liquidated, because we have liquidated once, sorry, once, twice, and 3 times here. I think this will hold, and you can see also this huge volume here. This means that here are actually some real buyer sellers and institutions. So I think this here will not be liquidated anymore. We may see some retracement here, because we also have this engineered liquidity. Your eyes will get trained if you trade a lot. You will train your eyes. You'll see this liquidity. It will be taken. I think I will try to sell from here if I have a very good confirmation, maybe on 15 minutes short. Now I will go to the USD pairs. I will start with the index. I will go to the weekly time frame. And as you can see here, we are overall bearish. So I expect that the next year, because this is weekly chart, dollar will be very weak. And we have this true supply here. But this doesn't mean that we are starting to sell dollar now, because here I think we have some strength right now. We my expectations, it doesn't have to be right, but as I said, it's only my expectations. I expect price to go from this demand here, because also this demand, I'll remove this demand also broke this structure here, and one, two, three. So we have this order block that took liquidity from a previous low, and then after that it went to break structure. And we also have a very huge gap here. Actually, it got filled a little bit, but I normally like to see it filled maybe to the half of it, like 15%. So there is only two possible waves, and of course it's always the two possible waves, because it's either goes down or up. But as you can see here, price here retraced back, and it didn't even reach the 61%. I think it's reached like 50%, which is also a very good retracement level. So it may go down from here. I'm looking for arrow. Maybe go just down from here. It's like 1, 2, 3. And here is the correction. And so if this is wave 1, this is wave 2, and this is 3, and it will be very long 3, I guess. So it will be some weakness on the dollar. Or the wave 2 is not finished yet, and we may see, as I said, some strength in the next maybe weeks on the dollar. And this is actually what I expect, to see some strength, maybe to until it reach this area, and then it will start to drop like crazy. And if we look at the other pairs, maybe USD franc, it's tricky. So especially right now regarding the USD pairs. So I would suggest that you maybe, I will leave these pairs right now. I will only may trade the pound USD, because it's the only one who is maybe has clear pattern. Because here maybe on the USD franc, I will draw this channel. I think this is wave 2. 1, 2, 3, or maybe it's 4. So it's a correction. I see it as a correction, to be honest, and I think it's going up from here. And at the same time, I'm also seeing some some retracement, but I won't trade it. I'm just saying that it may go down to this area, but I won't trade it. Here, if it goes back here, I will buy. If not, it also can go up from here, to be honest. We have here a very good order block, and price reacted in a very good way. But at the same time, you also have a order block here, and price may just go like this, or it may continue to the upwards. But the best thing I have learned through years, it's do not trade corrections. This is a correction, so you don't trade it. If a price came back to here, you trade it, but you don't expect price to go from the correction back to the where it started. The expectation is that it will go up. So maybe if you see some breakout from here, you can start opening a position. The most clear one is USD CAD has the same pattern, and EUD USD. I think I've discussed it before. We have, it's also tricky. I said on the other video that we may go up from here, and we also have a very good gap here, but it also may be a trap, a bull trap, because as I said before, this is a correction also, and you don't expect to go against the trend, because I think the trend has reversed, to be honest. Even if this, we are now on the still on the trend line, but this looks like, as I said, looks like correction, and it's better not to trade it, because it can be both ways, and better that to wait for a trade that is very clear, because we have here this order block, this one here, this wick, and as you can see here, it got liquidated, and then I think it will go down a little bit, even that we have this liquidity here, and I would like to see it, to see price goes to this area here, to this gap. If it goes here, I will enter a short position. Otherwise, I won't trade this setup here. I won't sell it from here, because here, as I said, it's tricky, because price may go from here to here. And also, I won't buy it from here. So this is not a sell setup. This is not a buy setup. Only this is a good sell setup, I guess, here, this supply with this fair value gap that created. The only clear one, the clear ones are pound USD and NASDAQ or indices. This one here, I may enter a position actually with low risk, because as you can see here, this is a correction, the same as other pairs, but this one is different because it corrected to a very good level, because the other ones didn't reach such a high level of retracement. Here, it reached actually the 77 level of retracement, and it also already filled this gap here. So this one is a very good sell setup here, because I think this is 1, 2, and we are going like heavily like to the downside. So the only pair I will be trading right now is the pound USD. I will put my stop loss either here, or I, to be safe, I sometimes I use the minus 23 Fibonacci level. And on NASDAQ, we also have a very good setup. But I won't advise to take two positions on pound USD and NASDAQ, because they are both correlated. You can divide your risk, because if you are going to risk maybe 0.1% or 0.2%, so it's better to divide the risk, maybe 0.1% on the pound USD and 0.1% on the NASDAQ, because they are correlated, they are the same. So by opening two positions on the same correlated currencies, it's like opening one big position. So it doesn't make sense. Here we have this gap, very small gap, and what you see here is price reacted in a very good way, and you will see that better on 1 hour chart. A very good reaction actually, that broke another structure on hourly chart, and then you go down. It's like that. You start from maybe weekly, and then go daily, then 4 hours, then 1 hour, then maybe 15 minutes, and here you'll see like something like this. For me, it looks like Wyckoff distribution. I expect price maybe to go a little bit here, and then start the down move. I will put my stop loss. You can put your stop loss here, but it's also, if you can see here, where you have 1, 2, 3. It's also a liquidity zone, so it's also dangerous. We may see maybe some wicks here to manipulate these highs, and then go down. So to be safe, I will put my stop loss as I usually do. I draw my Fibonacci. My stop loss will be these areas here, maybe here, or to be more safe, as I said, here above the minus 23, because if it reached this area, it means the setup is wrong, because sometimes it goes in this area and the setup is still valid because it goes here with some wicks and then it goes down. So it's better to have your stop loss here. You are sure that if it goes here, your setup is mostly wrong. So that's it for today. Follow for more.